Hello everyone, and welcome back to another market review. This is Silent. Today we're looking at the NASDAQ December contract for 2025. We are starting off with the weekly chart, and right away you can see how we have gapped up and have carried on through our Monday's trading with a strong bullish delivery. We've gapped up and rallied almost about 400 points since the close on Friday, so it was very nice to see, and expecting that to continue throughout the week with slight pullbacks in between. I've taken the liberty to clean up the chart a little bit on all of these time frames. As you can see, we just have that buy-side imbalance noting where this expansion is delivered from, and we can get a note of that new week opening gap here. We're looking at the close on Friday and the open on the Sunday. The area with these wicks here is where the volume is imbalanced, and we also have a liquidity void here. So this is just an area of no trading offered whatsoever. So I wouldn't be surprised if tomorrow could come down and retest that, or maybe Tuesday and Wednesday make its way down into that range and then continue another rally throughout the rest of the week. I noted that new week opening gap here on the 4-hour with these lines, and I've also brought our attention to this most recent 4-hour buy-side imbalance. We will have one with this candle after the market opens again, but I'll be looking at the lower one because it's the most in discount in terms of this price swing from today, and it'll be the area where I would like for price to reaccumulate from if we're going to leave this gap open. If we're going to be having this gap as a draw on liquidity for Tuesday and Wednesday, I'll also be using this 4-hour buy-side imbalance as a barometer for an inversion array. If we begin trading below this price range and respecting the low to the midpoint of this shaded area as a premium array, I'll be looking to short that going into the new week opening gap and attempt a delivery into this range to put some bodies. Now on the 1-hour chart, I've marked the new week opening gap in a green shaded rectangle, and I've added our daily delineations with our vertical lines and a line out in time horizontally marking out our midnight opening price. It'll benefit you to draw the midpoint of the new week opening gap as well as the quarter ranges if we begin to draw down into this range. So as we approach it, we'll be utilizing the high, then the first quarter, then the halfway point, and as far as 3/4 gap and the low. If we're going to return to this range and still be bullish, we need to stay in the upper half. On the 15-minute time frame, there's not much to pull from in previous days' price action because we are at all-time high. So I've just marked a couple of levels from the 15-minute chart that we can work with for journaling purposes. Again, we have the green shaded area as our new week opening gap, midnight and midnight opening price here. We consolidated and rallied up during the Asia range and continued that rally shortly after midnight did its consolidation. After London, we retraced a little bit and took out some short-term lows and hit a reversal in this area with a fair value gap. We rallied up through the London highs with this gap. So the London high overlapping with this buy-side imbalance is a strong buying opportunity, and you were offered that multiple times throughout the New York session. After the accumulation here, price is released and goes into another accumulation phase throughout the lunch session. As we close lunch and begin the afternoon, we get another buy-side imbalance going outside of that range above these highs, and every time we come down and test it, it's offered as a buying opportunity before rallying strongly to close the day, and we close near the high. I've just brought those same 15-minute lows down onto the 5-minute chart. Not much that I want to bring into this price action besides the wickedness that was delivered on the open of New York. There was no real news today, so this kind of price action is normal. The delivery up and then dropping it down on everybody was just to scare our initial long traders out and get in new long buying opportunities for smart money. We rally up, drop down one more time into this 5-minute fair value gap here, and price goes up and starts grinding out traders through lunch session before getting that push up and buy-side imbalance on the 15-minute chart. We chop around a lot throughout the end of the day after lunch, and it's just grind down traders who are expecting a quick price delivery and fast profits, their patience is tested throughout all of this action today. And although it's going up, it just moves sideways slightly. It's not something that an impatient trader would feel comfortable trading today, most definitely. Finally, after all this grind and consolidation for the afternoon, we rally up, and I believe this is earnings. Alright, all I've done on the 1 minute chart is add our first presentation fair value gap for the AM session and the PM session. You can see how price chopped around on that throughout the open. That's kind of signaling to us as an early warning sign that the day is going to be a choppy day. And although it rallies up and comes down to retest it for a buying opportunity, all this accumulation in here is very choppy and aggressive for entries. It's hard to get on something like this and feel comfortable when price looks like this. There's no real gaps signaling to you that price is about to go until it's too late, really, to get an opportunity with that first presentation fair value gap. You would have just had to trust the order block here and wait for that imbalance to show up, and after this, price doesn't even come back and test it at all. We come down and hit that imbalance, respect the upper half. We rally up with that aggressive choppy delivery. This kind of buy program is not something I like to be a part of. They take it up a little bit, bring it down, and then as it rallies away, it just chops a lot, and then it presses up again after stressing you out a little bit or getting you to close your trade prematurely. That's really all this is doing. It's getting you in and then stressing you out, trying to get you to exit early before they continue higher and just make their way up. And as we get into the afternoon, you can see that open just on the 130 time frame. We start to create a nice structure here on the afternoon open. We leave this first presentation fair value gap. Price comes down and tests it. We trade higher, and again more consolidation, grinding traders out before the earnings release at the end of the day. It was a very difficult session today, and hopefully the rest of the week will be cleaner. I'm hoping for more dynamic price moves instead of delivery like this. If we continue this kind of price action going into tomorrow, I will stay sidelined. The main thing that's going to tell me is how we're trading in the overnight and what we do with the first presentation fair value gap in the opening range of New York tomorrow. Alright guys, so that's going to be it for me. Hopefully you learned something. If you found anything insightful, please let me know in the comments. And as always, leave a like and subscribe. I will see you all tomorrow.